Hi, this is Lena R. from eXp Realty, and today I have with me Jun Kim. He is a loan officer, and he is from Mortgage One Group. And I want to introduce you, and if you could talk to us a little bit about your background, how you got into the mortgage industry, Jun.
Definitely. Well, first of all, thanks for having me, Lena. Definitely a pleasure to be here. I definitely come from a completely different background. I come from a software engineering background, so very, very different from that of the mortgage industry. But I was fortunate enough to go ahead and be introduced into the industry by a couple of my friends who already have been in the industry, and I love it. I love being able to go ahead and help people get into the homes. Some of my best memories in life have been at home with my family. So, being able to go ahead and help people to really be able to get into their homes, the home of their dreams, it's a gratifying experience. So, loving it, loving it. So glad to be here.
Great, great. So you are a numbers numbers guy, excuse me, and now you work with numbers again.
Yeah, it's definitely a little bit better for me because on the software engineering side, it's definitely been about problem solving, and that's all
Mhm.
you do. You don't really interact with too many people outside of your team. But as a loan officer, I'm able to go ahead and do a little bit of both. Definitely the analytics side, playing around with the numbers to make loans work, and at the same
Yeah.
time, being able to go ahead and deliver this to my clients and make sure that they are on the same page. So yeah, it's definitely a fun and, like I said, a very gratifying experience.
Yeah, no, absolutely. It is a complex process. I mean, buying your first home is such a milestone, right? It's an emotional feeling and also a big financial commitment.
Yeah,
Not a lot of people understand what the commitment is until they get into it. So, if somebody has never bought their first home, what would you recommend speaking to a realtor, loan officer, or maybe even a financial planner? Where would somebody start?
yeah. So a lot of people who haven't, who have zero idea of about the home buying process is automatically you're inclined to think that you want to go ahead and talk to a realtor first and start looking
Mhm.
for homes right away and say, hey, I want a home in this area and I want this type of home. But in the end, you have to make sure that the financials work first. Number one,
Right.
you have to be able to go ahead and be qualified for the loan. And not just qualified, but you have to go ahead and see if the mortgage that you're going to be paying on a monthly basis, you're going to be
Mhm.
able to go ahead and afford it. Okay. Just because you make $5,000 a month doesn't mean that you can spend that entire $5,000 just on mortgage and not worry about any of your other living expenses, right? So you want to go ahead and try to see where your financials work. This is was a term that some people use of being house poor.
Mhm.
You're a homeowner, you have a house, but you have zero money to spend on anything else. So
Yeah.
you want to go ahead and usually speak with a loan officer first to go ahead and see how much home you qualify for. Okay. And if the actual mortgage payments that you're going to be responsible for on a monthly basis, you're going to be able to comfortably afford it for you and your family. Okay.
Mhm.
So after we're able to go ahead and find out how much you qualify for and make sure that we're within budget, then you could go ahead and have a criteria or a limit in terms of what type of homes you should be looking for in terms of the purchase price.
Right. So a first initial meeting with a loan officer like yourself, you just show up. What kind of papers do you bring, or what, would you prepare to bring to the first meeting?
Sure, sure. So it's going to go to differ based on your income type. Obviously, if you are a salary worker, a W-2 employee, then you're going to go ahead and bring your W-2 forms along with the last two pay stubs. Okay. On the pay stubs, it's going to go ahead and show how much you make and what type of payments you get. Are you a biweekly payment? Are you a semi-monthly? Are you a yearly or an hourly wage? So that all that information is going to go ahead and show up on your pay stub. If you are a self-employed worker, do you file a Schedule C? Are you a S corporation self-employment? Are you a C corporation, and etc. So you want to go ahead and bring your business tax returns, and thirdly, you want to go ahead and bring the last 2 years of your individual tax return. It's called a 1040, 1040 individual tax return. So you want to be able to go ahead and bring that as well. Okay, so that covers the income documents that we need to go ahead and be able to see to get you pre-approved. Okay. Next, we want to go ahead and also be able to identify you. So your driver's license usually helps. So if you don't have a driver's license for any other reason, your passport. Okay. Fourthly, if you do own any other properties. Okay. If you have a rental property, if this is your second home, then you want to go ahead and bring all of your mortgage information as well. Your most recent mortgage statement, your HOA dues, if any, along with your homeowner's insurance as well. Okay. And then lastly, this has to do with your credit. So different loan officers do this in different ways. Okay. The official way for us to go ahead and do this is to go ahead and do a soft inquiry. Okay. When we do a soft inquiry, it does hurt your credit score very, very minorly, anywhere from 2 to 5 points. Okay. But some borrowers and some shoppers don't even like that. Okay. So in that case, what we do during the pre-approval process is, or what I do at least, is as long as I'm able to go ahead and get a very, very accurate assessment of all of your financial responsibilities on a monthly basis, whether that is your car payment, whether that is a student loan or a personal loan, or et cetera. As long as you're able to go ahead and give me a very accurate assessment of those, along with the most recent FICO score, then I technically don't have to go ahead and pull a soft inquiry, at least during the pre-approval process. Okay. Now, one caveat here is if there are significant differences from what you are able to go ahead and tell me during the initial meeting and what's on the actual report, then that's going to go ahead and change, or it may change the qualifications along with the rate that you're quoted and et cetera. Okay. So again, the safest way is to go ahead and do a credit pull. Okay. If you guys are, if the borrower is very sensitive of it affecting the credit score, even if it's 2 to 5 points, then we could go ahead and go with the plan B. But in the end, that is pretty much what we need during that initial loan consultation for the loan officers to go ahead and give you the most accurate assessment.
So if it's an individual, they can bring all these documents, but if it's a married couple, they would gather all the documents together that they file jointly.
If they want both the spouse, if the married couple, both of them to be on the application, then yes. Anybody on the loan application, we would need all of those information for.
Okay, so it could be a spouse that doesn't want to be on the loan, perhaps bad credit, that they don't need to be on the loan.
Exactly. And a good loan officer should be able to go ahead and assess all of that and say, hey, your income by yourself, you're able to go ahead and qualify for the home that you're looking for. However, your spouse has additional income, but at the same time, her credit score is going to go ahead and hurt the file, in which case they should go ahead and advise that you go on the loan by yourself. Okay.
Got it. And you can always change the title when you buy the house afterwards and add your spouse's name.
Exactly. Now, one advice that I could go ahead and give to first-time homebuyers is instead of having all of this in paper and carrying it all around, all of this is very personal, very, very sensitive information. Most people use Gmails. Most people have a Google account. Scan all of these or get it from your CPA in the PDF version and put them in your Google Drive and organize them in a way in one folder and put all of your W-2s in one file, all of your 1040s in one file, all of your monthly liabilities in one file. If you have any mortgage documents, all of that in one file, and just put it into your Google Drive. And every time you meet with the loan officer, you're able to go ahead and say, hey, I have all of these already, cleaned up and organized for you. And you could go ahead and either share it with them on the spot. You could go ahead and share it with them before the meeting by giving them access to the Google Drive. And then after you're done with the meeting, if you don't feel comfortable of them having that information, you could go ahead and just simply unshare it with them. Okay.
Oh, that's a good idea. Because sometimes, we forget and we're like, okay, I'm going to email it. I'm going to text it to you. And we don't realize all the security problems that go with that.
Yeah, exactly. So it's a good way for you to go ahead and always know that you're going to go and get the most out of each loan consultation. And at the same time, you have control over who you share that information with. So just one tip that I want to give first-time home buyers, just have it organized already. Yeah,
that's great.
Some people use Dropbox. Most people use Google Drive. I think it's the most accessible way to go ahead and share documents in a short time. So.
How old do you have to be to apply for a mortgage or loan?
18 and older. But obviously, with the income qualifications, usually home buyers tend to be a little bit older, but
Mhm.
the legal age would be 18.
Mhm. So during that process, when they're having, this sit down meeting with you, what are typical questions that you would ask in concerns to if somebody is wanting to buy a house, maybe 2 or 3 years down the line? Should
Yeah.
you have this conversation with you now or
Yeah,
wait?
yeah, most definitely. If anybody is trying to go out and buy a home, whether it's now, whether it's 2 years, even 5 years, 10 years down the road, the loan
Hmm.
consultation is not just about having a meeting right before you buy a home. You may
Hmm.
have financial situations. You might have different things that hurt your eligibility to be able to go ahead and be a homeowner, to be able to go and qualify for a mortgage. And if you're aware of the things that you need to go ahead and improve upon for you to be able to go ahead and lock in the best rates when the time comes, when you're able to go ahead and in order for you to be able to be eligible for the price of the home that you want to go ahead and eventually be shopping for, there are going to go ahead and be criteria for every individual home shopper to be able to go ahead and improve upon if necessary. If everything is perfect, then I could go ahead and let you know, hey, everything is perfect. You're actually ready to buy a home right now. And then they could go ahead and consider being able to go ahead and go around and look for homes. But a loan consultation should either be able to go ahead and give you confirmation that you are eligible to be able to go ahead and purchase the home that you're looking for. Or if you are not, for any other reason, the loan consultation should also be able to go ahead and provide you with information on what criteria you need to improve upon and how you're
Hmm.
able to go ahead and do that.
I see. And is there a cost to have a consultation with a loan officer?
If anybody is charging you to have a loan consultation as a loan officer, you should probably get up and leave right away because you should not be
Nobody
paying them.
knows, right? I mean,
Yeah,
like this is the first time home buyers, they may not know. So this is
yeah,
imperative.
exactly, exactly.
Yeah.
I could be wrong. I'm sure there are loan officers who charge for an initial consultation meeting. Very few, I would say, but no. No, most loan officers, if not all, should not charge for an initial loan consultation. The only thing that some may charge for, and this is dependent on the lender, is if you want to actually pull your credit report and do a soft
Hmm.
pull, then obviously that is done through a third party bureau. And because of that, there are credit pull application fees ranging anywhere from $25 to $80, depending on how
Hmm.
many people you need to pull that from. So that would usually be the only fee, but for the meeting itself, you should not be charged.
Got it. Got it. So after a good meeting, you go through all the numbers and the papers, and do you issue something like a pre-approval, a
Exactly,
pre-qualification
exactly.
letter? What
So
are those? Yeah.
So in the case that the borrowers are approved, then you are able to go ahead and receive what's called a pre-approval package. Okay. On that pre-approval package, it states the maximum purchase price along with the maximum loan amount. Okay, along with things such as the borrower's credit score, so that you're able to go ahead and start looking at homes. Okay. Once you're able to go and get a pre-approval package, the realtor who you work with is able to use that pre-approval package to go ahead and start putting in offers for the homes that you want to go ahead and eventually purchase. Okay. Now, there is a difference between a pre-approval and a pre-qualification. Okay, a lot of people ask me this question. A pre-qualification is a light version. It's a condensed and it's a very quick version, looking at the bare minimum, such as your credit score, looking at just the overall average income, yearly income, and based upon that, estimating how much you would most likely qualify for. Okay, so most pre-qualification does not require you to send all of the documents that we spoke about a
Mhm.
couple minutes ago for you to go ahead and receive that pre-qualification. Okay, the downside of it is a pre-qualification may cause issues later on when you actually put in an offer, because later on any institution that has given you that pre-qualification can say, hey, we actually looked into your documents, and when we looked at it a
Mhm.
little bit closer, then at the time of pre-qualification, you unfortunately do not qualify for this loan amount. So that's the bad part of pre-qualification. The pros, if anything, it's quick. It's a very, people probably get it in the mail all the time especially from major banks, saying, hey, you're pre-qualified for this mortgage, at this interest rate. But when you actually go in and get a pre-approval, first of all, the interest rate tends to be much higher and the loan amount tends to be much lower. So that's something that you want to go to keep in mind when you are issued a pre-qualification. A pre-approval, on the other hand, we go through the intensive checking of all of the financial documents, and we're able to go and give that exact amount of loan qualification. So it's a much more accurate assessment of your home buying power.
So if you're more serious about buying a home and you're ready to go to the pre-approval route rather than the pre-qualification
a lot of first-time home buyers, they're just because they don't know exactly what's going on, they tend to be like, oh, do I have to send all of these information? Like it has a social security number.
It's a lot of work.
It really is. And that's why, when I mentioned organize all of this in your Google Drive and have it ready to be able to go ahead and send to any loan officer at the time that you want to go and get pre-approval, it really makes the process much smoother, so that you're not you're not gathering information all the time, you're not rescanning and all of that stuff. So just have that all ready, and the pre-approval process should be fairly easy.
No, to agree with you on the point of the pre-approval. A lot of sellers, when they're looking at an offer, and when I submit, if a buyer has a pre-qualification, they may not even look at the offer. They want a pre-approval. So it just means that they're more serious in buying and gone through the process, as you mentioned. And how long does the pre-approval last?
Usually 90 days. Unless there has been some significant change in terms of your credit or your monthly liabilities. For example, let's say you had a pre-approval today and tomorrow you went out and bought a $70,000 car. And now you have a monthly liability added to your cost of $600 per month. If things like that, something significant changes such as that, or you decide to say, hey, I want to stop working. I got pre-approved for this house. I know I could go ahead and get this house. You know what? I don't want to work anymore. And you no longer have your job that was, calculated into the pre-approval, things drastic such as that. Unless significant changes such as that happen, usually 90 days is the valid period for the pre-approval.
Okay, so it sounds like there's a certain no-nos and to-dos after you get a pre-approval. There's certain things that you should not do, as you mentioned. But do you have like a checklist that you give to people when they go home and remind themselves, like, any major purchases or changes in employment? Do you have something like this to remind people?
Yes, definitely. And that's something that I give out during my loan consultation as well. But it's very simple at the same time. Just make sure that all of your financial situation stays exactly the same as when you got the pre-approval. It's as simple. I
can't go shopping for furniture before I buy a house.
No, and that is actually the most common thing. People now
need to furnish a house.
Get a car, but they say, and this happens a lot during the application process.
Right.
So they got pre-approval, they put in the offer, they got it accepted, they opened escrow, and they open a new credit card at IKEA or Ashley's, and they start spending $15,000, $20,000 on new furniture for this new house. And if there's a lot of room in their monthly liabilities versus their income, then it's okay. But at the same time, if they were very, very on the borderline, then suddenly during the escrow process, they no longer qualify. Okay. What I want. A second tip that I want first-time home buyers to know is when mortgage companies do a credit check, they do a total of 2 credit checks in most cases. They'll do one at the beginning to make sure that they are able to go ahead and be approved. They'll also do one at the end of the escrow process to make sure that there has not been any significant changes since the first one at the beginning. Okay. Usually this period is anywhere from 3 to 4 weeks in between. Okay, so like I said, the only thing that you want to go ahead and pay attention to is make sure that everything stays consistent from at the time of application all the way to when your actual mortgage is funded.
Right, right. So say a buyer gets a pre-approval from you, finds a house from me, and we submit an offer.
Mhm.
How closely do we work together? Can you explain the process of a
Yeah,
realtor
yeah,
versus a loan officer and how we work closely
exactly.
together?
Exactly. Yeah. And you want to go ahead and view your realtor and your loan officer as a team. I know there's different criterias and different specialties that each one of us are going to go ahead and cater to. But at the same time, this is going to go ahead and be a teamwork type of thing. Realtors and loan officers are on the phone every day during the escrow process, at least a good realtor and a good loan officer. They give each other updates. They give each other things that we need from each other. And it's a very intimate process throughout the escrow in order for us to go ahead and have a smooth transaction. Okay, so a lot of first-time home buyers ask me, hey, my realtor actually introduced me to you, but I have a different lender who I was also introduced to by a friend of mine. And is there a difference between the two? Like, can I go with this person or should I go with you since my realtor introduced me to you? And the short answer is, if your realtor and loan officers are good at what they do, they're going to be able to go ahead and help you out in the best way can, no matter who they work with. But at the same time, I do believe that there is a synergy effect between a loan officer and their preferred, or the realtor and their preferred lender. And it's because they've gone through so many transactions. They know that this person is responsible and make sure that they could go ahead and make sure to do their part to close on time, make sure that there's no errors in throughout the escrow process. So there is that synergy effect of being able to go ahead and create that teamwork. So I do recommend to use a preferred lender that your realtor does recommend. So yeah, in short, it is there is an importance of being able to go ahead and have that synergy effect between the two.
Yeah, no, I absolutely agree. I mean, it is one of those things where if you find the wrong lender, a lot of bad things can happen,
Oh yeah.
and your offer can fall through, and escrow can, be a very challenging process. So,
Yeah,
you
yeah.
know,
So I think one tip that I want to go ahead and give to the first time home buyers, I know just naturally, even myself, when I was looking for homes, rates are going to go ahead and probably be the first thing that pop up in your mind when you look at or work with a loan officer or a lending institution. Okay. Yes, rates are important. It's important for us to go ahead and get the most competitive rates to go ahead and make the best financial choices. But at the same time, especially as a first-time home buyer, the priority is to make sure that you're able to close escrow. Okay, make sure that there is nothing that goes wrong during the escrow process, making sure that there are no errors, making sure that everything is done on time. And a good loan officers, not only should they be able to go and provide you with the most competitive rates, but at the same time, they have to go ahead and be good at what they do in terms of being the middleman between the realtor and the lending institution, between the escrow officers, between the title officers, and being able to go ahead and have a very, very good communication between amongst the entire team, including you as a first-time home buyer, in order for them to go ahead and have that smooth transaction. Okay, so
that is very important. I've had loan officers and lenders not call me back.
exactly.
They are not good with follow up, and that impacts the escrow and the whole process. And it's challenging to work with non-communicative
Yeah, yeah.
individuals.
I actually just had a client who I was able to go ahead and provide assistance to just last week and say, hey, I wanted to go ahead and switch lenders because my lender does not pick up his phone after
Mhm,
5 p.m. And on the weekends, I can't reach him. I was told by my realtor that I need to go and get all of these conditions and
mhm,
documents in by Monday,
mhm,
but he won't
mhm.
pick up his phone on Sunday. That type of thing. At the same time,
Yeah.
I understand, but it's a time crunch. We need to make sure that we're able to go ahead and get things done by a certain period of time in order for
Mhm.
us to make sure that you get the keys on time as well, without any penalties, without anything of that sort. So yeah, I think the open communication is important, and number two, availability. Being
Mhm.
able to go ahead and really care about your clients as if this is your own home, and make sure that you do everything you can to make sure that things get done on time.
Yeah, I mean, I would just caution first-time home buyers, like if you Google and go do your internet research, who knows what you'll find, and it may be, somebody that your realtor has never worked with and maybe has a reputation for not, closing deals, and so it's imperative to either get a referral from somebody that has worked with a lender before, or a trusted real estate agent, so that you have that sense of someone's got my back. This person has worked with the realtor before, and so it'll be a smoother transaction. So it is so imperative, the communication line, not to have it broken down. So yeah,
Most
no, I
definitely.
completely agree. So in terms of what you recommend in how to find the right lender or loan officer when someone's looking on the internet, what do you recommend not to find, or run the other way when they come across somebody with the qualifications that they may not know, what's a good lender or not? What do you do?
Sure. I mean, usually when people just do just the raw research online, you're going to come across usually four different type of lenders. Number one is going to go ahead and be your big internet lenders, where you apply online and you go through the entire process online. Number two, you're going to go ahead and have your major banks, Chase, Wells Fargo, Bank of America. You're going to see advertisement with those lenders as well. Number three, you're going to go ahead and see brokers, people who don't have the in-house mortgage process, but they broker it out to different entities. And then lastly, you're going to have your direct lenders as well, where they do the in-house processing, underwriting, all the way to funding. So you're going to see different type of lenders online, and each entity has their pros and cons. If you know exactly what you want and what those pros and cons are, then you can go ahead and just research online for those type of lenders. But usually when you're just doing a raw research online, you obviously want to go ahead and look at the reviews, make sure that they're able to go ahead and have positive feedback over not just a month or two, but over the last year, last 2 years, last 3 years, and go with that. And if you don't know any particular loan officers, it's like I said, instead of going online and searching for them, talk to your realtors, talk to your friends, talk to your families, people who have already looked for or bought homes in the past. They've worked with people and they'll go ahead and give you positive feedback or negative feedback. And I think being able to go ahead and connect through referrals are the safest bet, instead of just doing a raw research online.
No, that's wonderful. That's a crucial, information that not a lot of people know, that this is just bare basics, straight to the point. Go ask for referrals. That's the best way to find somebody who is a trusted lender. And you kind of roll the dice when you find some people online.
Yeah,
So,
and just because you ask for referrals, you don't have to just ask referral for one person, for one
yeah.
loan officer. You could look for 2, 3 loan officers and talk to all 3 of them. And like I said, when you prepare all of those documents and have it readily available for when you have those initial loan consultations with 3 different lenders, for example, and you're going to be able to go ahead and feel this is a people to people type of transaction. It's not just going to go ahead and be with the numbers. You're going to be with your loan officer for the next 45 days, and you're going to be probably talking with them on a daily basis. Do I
Yeah.
actually like this person? Do I feel like this person actually cares about my transaction, about my home buying process? You're going to be able to go and feel all of that each time you talk with the loan officer. So it's not just about, oh, this guy's giving me the best rate, I'm going to go and go with this person. No, I definitely don't advise that. It would be nice if they gave me the best rate, and I was able to go ahead and feel that empathy, that
Yeah.
careness,
And rates
from
change. Don't go
exactly.
with the first person that's going to offer you the best rate, because you can always refinance. Rates change, go up and down. So don't do
Yeah.
that.
That's a great point too. A lot of these advertisements, especially you see
Mhm.
online, they say, oh, we're going to be able to go ahead and get you X, percent rate. And by the time that you actually go in to sign the papers, you're going to see that it's much, much more elevated. So,
Yeah.
um, you know, um,
Don't fall for the clickbait.
yeah, the rate come at the end. As long as you qualify
Yeah.
for the loan and you're able to go ahead and, again, be able to set a budget for the monthly mortgage responsibilities, don't really focus too much on rates. Okay. Just like you mentioned, refinancing opportunities will always come. We're in a market right now where we do see very, very high short-term rates, especially after COVID, when we saw the 2s and 3s. It feels like we're at a very, very elevated interest rate kind of period. Yes, compared to the last couple of years, it is. But when you also look at it from the historical mortgage rates, the average is 10%. So it's all in perspective. Okay. But one thing that is 100% certain is you will always be able to go ahead and go through a cycle where you see the interest rate drop, and you will have to go ahead and you will have the opportunity to be able to go ahead and refinance. Okay. So yeah, rates, again, that's the very first thing it's the very first talking points that most home buyers do come in with.
That's a myth, so definitely it's the overall package, the person who is behind the title of a loan officer, are they communicating? Do they have good reviews? And are they, somebody that you can trust with sensitive documents? And, it's a long-term thing. Sometimes when you buy a house and like you said, if you refinance, maybe you come back to that same loan officer and work together. You are such a wealth of knowledge and so amazing. Thank you so much. Are there any other takeaways that you'd like to share?
If you guys have any further questions, any more specific questions regarding any sort of particular programs, I know today was just a very, very just the overarching basic information for what you can expect during the initial stages of purchasing a home. But if there are any other additional questions, feel free to go ahead and email me, call me, and I'll be more than happy to go ahead and assist you.
Thank you so much, Jun. I'm going to link your information below. And if anybody has any other questions directly for me, I have my information below too as well. Thank you so much for joining us, Jun Kim. Thank you.
Thanks so much. All right.